committee member Divya Jokhakar, dear seniors, dear friends, and those who have just logged in and viewing live this session through the live streaming facility that is now available from the BCS. I welcome you all to this very interesting topic on is BEPS is BEPS I
Answer to the tax
answer to the
planning.
tax planning, yeah, because this is a very intricately worded session, and it has got its interesting pluses and minuses. I think throughout the session we'll understand how it has been coined and why it has been coined like that. Friends, we would have all known that there are various kind of sandwiches available, and we also know that there is an Irish coffee also. But very few of us know that there is a product called double Dutch, double Irish with a Dutch sandwich. So this is a typical product which is available for tax planning, and all the multinationals have been using this product over the years to see to it that there is a substantial base erosion and profit shifting happening at minimum tax or maybe zero tax,
Hmm.
and everything goes accumulates in the offshore entity. So typically this structure, how does it work? That there are two Irish companies set up and one in the Netherlands, and there's a one offshore entity. The structure is in such a way, designed in such a way that the multinationals don't pay a single rupee tax. And this has been used widely by Apple, Microsoft, and Google,
Google, yes.
and all the giants. So, but what really triggered and or rather opened their eyes. This was nothing new that the developed country did not know. But what really triggered is the financial crisis that happened in the U.S. in 2008, which really triggered. Then that said, "Okay, I think this enough is enough, and we need to do something about it. That there is substantial profit, there is no tax being paid, even though there is a substance. Is there? There's a source and there is a substance, but because of the tax laws, and they were evading it. So this all the G20 countries came together, and other countries also participated. And what we have now is the BEPS, there is the base erosion and profit shifting action plans, and wherein now they are contemplating, and all some of the countries, even though the all the action plans are not already applicable, but a few countries are already taken up on their statutes, like the UK, the diverted profit tax, and even India to a certain extent the equalization levy. Whether the equalization levy is actually a tax where is going to really be like a BAPS or not, we don't know, because is it really affecting the countries who's from where the money, for example, if you are paying advertisement slot to Google, is it Google who's going to pay the tax, or it is the resident Indian who's going to pay the tax? So we are going to have we are here for a good treat, because Ashwin Bhai has painstakingly prepared the presentations in four parts, and with the wittiness and of Sushil here, I think he will be raising some very interesting questions, and maybe Rashmin will have to dodge them, a few of them. So introducing Rashmin Bhai, uh, he, uh, he's practicing as chartered accountant in Mumbai since 1975. His past subjects of interest are international taxation, foreign exchange management act, and international economics. In fact, he's a pioneer in starting the economic study circle in BCS in the year 1987 under the auspices of BCS, and under the leadership of Sri Lilibhai Thakkar. ITF Group was started with a dream to provide knowledge on FERA and international taxation to members. And sir, I have been one of the beneficiaries of that group.
Okay.
Thank you, sir. Today, these subjects have become as important practice for chartered accountants. He has made presentations at conferences organized by the Institute of Chartered Accountants of India, BCAS, CTC, IFA, and several other institutions on cross-border collaboration, investment, and international economics. He has also given lectures at Income Tax Department's training institutes and UTI Institute of Management, several management institutions on tax treatment for foreign collaboration, e-commerce, taxation. He is known for his views different from the mainstream, whether it's economics or taxation. He was appointed by the CBDT on e-commerce committee in the year 1999, and again appointed on the e-commerce committees in the year 2015 and 2016. Besides this, he is a social crusader and working tirelessly for the downtrodden. In fact, he is the recipient of the first prestigious late Narayan Verma's award for his social work that he has been doing all these years.
Thank you. Thank you.
Sushil, a dear friend, is a fellow member of the Institute of Chartered Accountants with 33 years of experience in the field of taxation. He has vast experience in the field of international tax and has been involved in advising structuring of variety of cross-border transactions. He has his own firm by the name Lakhani and Associates. He has authored a publication titled TDS on payments to non-residents and foreign companies for the Chamber of Tax Consultants. He has co-authored publications titled EPC Contracts, a Monogram, and Expatriate Taxation for the BCAS. He was a panelist in the IFA Basel Conference 2015 on the subject tax issues of global families. He was appointed in September 2011 as the representative of India on the executive committee of the International Fiscal Association Netherlands. He is presently the chairman of the India branch of the International Fiscal Association. He is also an active member of the International Taxation Committee of the BCAS and the Taxation Committee of the Indian Merchant Chambers and the Managing Committee of International Fiscal Association Western Region. He has been a faculty at various seminars and conferences and also one of the faculty members of the prestigious ITF conference for the BCAS. Please join me in welcoming Rashmin Bhai and Sushil Lakhani. So Sushil, you can fire the first question.
Well, thanks, Chetan, for your kind words of introduction. Welcome to all my friends. Well, friends, before we ask Rashmin Bhai to explain to us what is BEPS, what is its origin, what are the implications worldwide, what are the implications specific to India, and let me just coincidentally, it was Rashmin Bhai somewhere in the late 90s. When I was attending a conference that is almost 16 to 17 years back, that this topic about base erosion and profit shifting had started. The discussion had started around this topic when the e-commerce taxation began, and Rashmin Bhai was one of the initial persons in the world who started this talk that for e-commerce, these rules, the existing rules, will not really work. That time, of course, it was taken very lightly by all professionals. There were very few people in the world, I think, which who supported this theory. But now, 16 years later, today, as we stand here, the entire world is talking only of BEPS, and that is how visionary this person is that we are going to listen to. And I think he has always been an original thinker. Of course, that is the good side of it. Now, the role given to me, and and he told me while I was chatting with him that perforce you might have to take a opposite view because the topic is fireside chat and there has to be some fire. There is no fire around here, and so you will have to create some fire. I said, no, sorry, sir. I have opposite views in certain matters, and it's not perforce. I will be taking an opposite view. I'll be possibly expressing them and asking you a few questions, and not perforce, not with a view to create a fire, because there is certain things where I do not agree, where I have some strong views. So the way we have devised this talk is that there are 4 parts of Rashmin Bhai's presentation, and it will start with introduction of the topic. Then he is going to explain to us the mechanics, how BEPS was practiced by Apples and Facebooks and Googles of the world. Then he's also explaining to us the Indian tax implications and the e-commerce tax implications. Now, after each of his parts, the material has already been circulated. After each of his parts, there will be some discussion on those parts. Some queries will raise just to understand the concepts clearly. But the more interesting part is after those 4 presentations, where I'm going to ask him a few questions as an Indian, as to whether it is justified, whether India is really ready to be the torchbearer for this BEPS, and I'll give my reasons at that stage. I will also ask him certain conceptual issues on source, as to what is the exact meaning of source, and is India really a source country for most of these? Does it mean whatever his theory is, does it mean that we have to rewrite our laws? insofar as the meaning of the word source is concerned. And those type of conceptual issues which we have reserved for the end, where that is where really the discussion will become more interesting. And so I think without the entire time slot given is 2 hours, and I think we might fall a little short. So without taking any further time, I request Rashmi bhai to start off with his first part.
Thank you, Sushil bhai. Thank you, Chetan bhai. And my thanks to BCA for giving me this opportunity. Thanks to all of you for having come here in a late evening. Friends, today I will discuss BEPS. The idea is first explain BEPS theoretically, then give an illustration. What has caused all this commotion? Globally, all tax consultants are talking of BEPS. Suddenly, what happened that it has become an important subject. Having given the illustration, and it is just for a matter of illustration that I am taking Apple computers because it has done a massive tax planning. So that illustration I will take, then I will take a few more illustrations. BEPS is an international movement. It is not a single movement by a single country. It's a massive movement. To what extent it will affect India? Will India benefit, or as Sushil bhai has expressed some reservations, will India not benefit out of it? Let us discuss all these things. You can raise your queries. I'll try my best to answer your queries, but for the convenience sake, let us complete each part, and the queries relevant to that part we can discuss. And if we receive any queries by email from the friends who are watching on webcast, that also I will try to respond to. Friends, international tax parlance, the language which international tax consultants talk, it creates a halo. A lot of chartered accountants think, oh, it is something complex, I can't understand. Let me submit some thoughts on this. As Chetan bhai said, in 1987, Bombay Chartered Accountants Society started a whole campaign of spreading the knowledge on FERA, at that time it was FERA, and international taxation. And that time society's dream was that we want to train 100 chartered accountants to be experts in these subjects. Believe me, all over India, there were less than 5 people who understood FERA and international tax both together. And today I think we can say that in India there are 1,000 people who are very good on both these subjects. So that is, President sir, your success, the institution's success. Now, when we started in 87, I used to say, every conference which I addressed, I used to say, an Indian chartered accountant can deal with any law. We are proven intelligent people. It is not a matter of pride. I am just saying observation, because to pass final CA examination of Indian Institute is fairly difficult. If we have passed the exam, we are intelligent, we can deal with any law. So I used to invite chartered accountants and say that don't be scared of international taxation. You study it, you can practice it. That was 87, 90, 95 also I kept on saying that. But thereafter, things have become very complex, especially after introduction of transfer pricing provisions. Transfer pricing chapter is one chapter which has caused politicians call income tax department to be tax terrorists. That is only one chapter. Now we have got GAR also, and we will see when GAR assessments will start coming in. And then we have got POEM. Government after 2 years has not been able to publish the guidelines. Circular law is passed, circulars are not issued. Transfer pricing, POEM, GAR. And now you will have 15 weapons available to target the taxpayer under BEPS. Things are going to be fairly complex. So today I am not in a position to repeat my statement of the earlier years that this is easy come. At the same time, I will say there is a whole lot of halo about it. It is something meant for big chartered accountants. My attempt today is to remove the halo. It is a tough subject, but still I would say every chartered accountant who puts in enough efforts into it is able to understand BEPS. Actually, what is BEPS? It is tax planning. BEPS is nothing but tax planning. Now, tax planning, every article student also knows. Leave aside chartered account, we all understand tax planning. Now, action reports are action proposals to plug tax planning. So, once we understand this, then the halo disappears. There are some tax plannings which we are not conversant. Multinational corporations in international taxation do certain tax planning which a regular practitioner doesn't know about. So today I will explain you 4-5 tax plannings which are being conducted by MNCs. As Chetan bhai said, the Dutch sandwich or double Dutch sandwich or Irish coffee. Now what are all these fancy names given? Ignore the names. Plannings are very simple. However, we under domestic tax law do very simple planning which involves one step. In international, one step means, the simplest planning is say section 64. I don't want to pay a lot of tax, so I gift part of my wealth to my wife. My wife earns income. This is 50 years old planning, right? Simple. Come to international taxation. Somebody from Britain wants to invest in India, but instead of coming directly to India, he sets up a company in Mauritius, Singapore, elsewhere, and then comes to India. This is treaty shopping. This involves 2-3 steps. But okay, when we will see Apple computers, I have listed in my presentation 25 legal maxims have been utilized. This is where, normally, unless a person is very serious, he will think up to one stage, second stage, third stage, and then he stops thinking. And when you put up 25 legal maxims, it's only a rare person. He may be very intelligent, but only a rare person puts in the effort to understand the 25th step. I'll put it like this. Fact is here. That fact is hidden by a veil, let us say corporate veil, then second veil, then third veil, then 25th veil. So something hidden behind 25 veils, nobody puts in the effort to cut out those 25 veils. I will expose all the 25 veils before you, and then you will see that there is no big deal about it. It is only collection of several issues. My attempt is to remove the O which people have about BEPS. Now most of these tax plannings will become redundant once BEPS proposals have been executed, in the sense new laws have been made or double tax avoidance treaty is amended. Then these plannings will not be useful. Still, will BEPS be a complete protection against tax planning? As the President has asked the question, is BEPS the full answer to tax planning? In other words, is it a complete, effective anti-avoidance provision or not? My clear submission, which you will see in part 3 and part 3, is that certainly not. BEPS is only half the umbrella preventing tax planning. The other half is still open. We will come to that. I am going to the part 1. Let me tell you the major effect. I am still not on any slide, so I am just keeping this slide here. What is the major suggestion or proposal given by all the 15 BEPS reports? Once we understand this key issue, then the rest of the things become easier. As I said, tax planning essentially involves doing Act 1, proclaiming that I am doing something else, meaning fact is hidden, claim made is something different, and in between there are veils. Okay. Somehow tax practice has so developed that we consultants presume that form prevails over substance. Form prevails over substance means I have submitted my income tax return, I have submitted audited accounts, so it is income tax officer's duty to accept it. And if he doesn't accept it, he has to prove that something is wrong. Or I have produced my corporate arrangement, my agreements and things like that. Whatever is written document is final. This is how practice has developed. This is not Indian law. By Indian law, I mean law which prevailed in India before Britishers came to India. The Indian traditional system is substance always prevails over form. You always look at the truth, and no amount of hiding of the truth will help you at all. That is the essence of the law. Somehow today we are under the influence of the British kind of law where prima facie form prevails over substance. The entire exercise of BEPS is reverse this trend. Establish clearly that substance shall prevail over form. And I am going to this extent, income tax commissioners in relevant cases will be authorized to ignore your documents and to insist on you proving real facts before the income tax commissioner. It covers contracts, agreements, corporate structures. For example, you have a company in Mauritius and he says there is no substance in this Mauritius company. I ignore the corporate veil and I look at the real facts. This is one simple illustration. The second is you have sold goods to your associated enterprise. All friends who deal with transfer pricing understand that associated enterprise is something like a sister concern, subsidiary or holding company or whatever. Now your sales invoice is a contract. You have sold goods for say $100 per unit. Income tax officer will be entitled to ask you that I don't believe in your sales invoice, I don't believe in your purchase invoice. You prove that this is at arm's length. In transfer pricing, we have seen this. But transfer pricing applies to a chapter or a portion of your assessment. Now it will apply to a huge portion of your assessment. Why I am emphasizing is that all those who are practicing international taxation, for them understanding BEPS will become inevitable. You will have to understand it, you will have to master it. Every assessment will be like in our Indian Income Tax Act, Section 144 assessment, the best judgment assessment. I ignore your accounts, I ignore your documents, you prove everything to be substantially true. This can be very, very difficult. I will deal with it further, but I am first just telling you the key of all the BEPS reports is substance shall prevail over form. In POEM, we have seen that government came out with POEM guidelines and the whole profession really protested. What are we talking about? How are you going to talk of substance and things like that? That will be now applicable not just POEM but your whole of the assessment. Now I am moving to the first slide. This is what I have already said. What I am going to say is the meaning of BEPS, what has caused BEPS, the tax planning, the consequences of BEPS, and rewriting the whole of international taxation. Let me again come to the meaning of BEPS. Base erosion and profit shifting, that is the meaning. And I'll explain it with very simple illustration. What is base? Here we are talking of tax base. And assess's taxable income is his tax base for Government of India. For the assessee it is taxable income, for government it is a tax base. If the tax rate is 35%, I get 35% tax. If the tax rate is 25%, government gets 25% tax. Now, when I put exaggerated expenses, royalties, fees for technical know-how, interest, this, that and all, my net profit gets reduced. So my government's tax base gets reduced. This is base erosion. Is there anything difficult about it? Base erosion sounds to be a new term. Putting up additional expenditure, making adjustments in opening stock and closing stock, this is known for 50 years. Nothing new about it. This is base erosion. Profit shifting. A profit occurs in India, but by corporate arrangement and by agreements, the SSE shows as if the profit has occurred outside India. The most famous illustration is Hutchison's sale of shares to Vodafone. Company Hutchison SR was there. Hutchison owned 67% equity in the Indian company, and Hutchison decided to sell that 67% stake to Vodafone. Now, if the share transfer had taken place in the Indian company's share register, it would be an Indian capital gain. But what Hutchison did even before investing in India, mind you, I am making a very important point based on Supreme Court's observation in Vodafone case, that in international taxation matters, corporates do their planning even before making the first step. Before Hutchison invested in India, they created a Cayman Island company. There was a whole corporate structure. Under that, there were Mauritius companies, and those companies invested in India. Cayman Island company with a $1 share. Okay. Now, these shares were sold for $11 billion. $1 share was transferred, not the Indian company shares, but Cayman Island company share was transferred. And then they claimed that transfer has not taken place in India, transfer has taken place in Cayman Island. Now, this is shifting of profits outside Indian boundaries. Simple. Base erosion is reducing my taxable income. Shifting profits is shifting my transaction which makes the profit outside India. This is base erosion and profit shifting, or BEPS. This has been caused because of excessive tax planning, as we have quickly seen. This will have serious consequences in all international tax practice, tax compliance, and tax administration. Friends, I have just written some small forms. These forms are all known to everybody, but I will just emphasize, you have a look at the forms so that when we refer to these in the subsequent slides, you have a clear idea. COR is country of residence, meaning the country in which the SSE is resident. COS is country of source. When a person earns his income from another country, that country is country of source. Now, these are my own, the next two are my own forms. COM, this is not used in the normal parlance of international tax. Country of market. And COP is country of payment. If Amazon.com, an American corporation, sells goods in India, India is country of market. And as per presently established norms of international taxation, India may or may not be country of source. So I am distinguishing between country of source, country of market, and country of payment. Sub is a subsidiary. The rest of the issues, short forms, are known to you. I am going to slide number 2, and this is my request, friends. For next 2 hours of this presentation, kindly assume that you are not a tax consultant, because all of us have got our minds conditioned with what we have learned during articleship, during our profession, and with a lot of decisions. I am saying, for a moment, put all your ideas of fundamentals of international taxation in a box. Close the box. Open that box after 2 hours. Okay. I am making some radical suggestions, and those radical suggestions will clash with established ideas. I'll justify my suggestions. Thereafter, you decide what is true, what is false, what is acceptable, what is not acceptable. But for 2 hours, for the sake of receptivity of my suggestions, I am saying close the box. I am on slide. What is the difference? You see, in India, and seniors here would know that Indian government has amended Indian Income Tax Act for more than 100 times. Every time it is an anti-avoidance measure. We did some planning, government doesn't like the planning, so government amends the law. Okay, and later years, government started amending the law with retrospective effect. Okay, so what is the difference between all those 100 amendments to Income Tax Act and BEPS? This is a very important idea. As I said earlier, under tax practice, we have come to understand or accept a theory that if I have entered into an agreement, that agreement is final. If I do a tax planning which is legal, nobody can criticize me, nobody can penalize me. Criticism we forget, that is a subjective issue. But under the law, nobody can penalize me. Anything which is legal, and there have been decisions that every SSE is entitled to minimize his tax liability as long as it is legal. BEPS is a serious attempt to destroy this belief. You may have any view. You may believe that legal tax planning is perfect. Friends, be prepared that this belief will be destroyed. After BEPS proposals are implemented, what they will say is, where is the substance? Whatever is the substance is the legal matter. If you are not showing your accounts, if you are not showing your taxable income as per substantial facts, then we will ignore whatever you may call it as legal. And you see, even high-powered committee established by Government of India in the year 2000 was at loss, because we said these e-commerce companies are avoiding Indian tax. How to tax them? We may go ahead and amend the Indian Income Tax Act, but ultimately the treaty shall override the law. And if the treaty is something which is in the jurisdiction of OECD, India can't do anything. So the high-powered committee in the year 2000 could not make a recommendation. What we said was that the concept of PE is outdated, that the existing system, existing as on the year 2000 of international taxation, is not capable of dealing with e-commerce, and we must change the system. This was said by high-powered committee. Nobody took any action until, as Chetan Bhai rightly said, the American economic crisis hit America, then hit Europe, and all these governments were really at a serious loss of revenue. So then they realized that, all this is facade, legal or illegal, you leave aside. What we want to know is what is the substance behind taxable profits. We can no longer afford tax planning which is going beyond the reasonable limits. Today, mind you, more than 90 countries have agreed to implement BEPS. So today, no longer the debate of form over substance remains. Whatever may be your view, my view is not relevant. 90 governments have decided substance shall prevail over form. How they will implement is a different thing. The collective action by global entities is the major difference. They are changing the law itself. They are changing the treaty model itself. Yes, sir, please.
Just a request.
Yes, sir.
Since we have to do 4 parts, and I think we have to do a chat.
Yeah.
So my request would be that we at least the first part we could try and do it in the next 10 minutes, and then we could have some time for chatting on that. Otherwise, the time may not permit us to complete all the 4 parts.
Right. Shall we go to slide number 9? I am giving here as an illustration just to explain profit shifting. Consider an illustration of an American multinational corporation. It is tax resident of USA. The US tax law is similar to Indian tax law in the sense that an American resident is liable to American income tax on its global income. So this company has its sales in 100 countries around the world. Profits earned from all the 100 countries would be taxable in USA. How they avoid US tax? They set up a company in a tax haven. And throughout I have taken illustration, and just please understand I have no criticism against the Apple computers. Just to convey an idea of tax planning, I have taken it as an illustration. So assume it is Apple computers. Okay, it has set up a company in Ireland. Now, as you know, American corporations outsource most of their manufacturing and even creation of intangibles, intellectual property rights. Like Microsoft software would be developed in India, Japan, or Israel. Similarly, Apple computers, lot of ideas would be generated outside USA. So all these outsourced products and services will be purchased by Apple Ireland, and they will be sold by Apple Ireland. So purchase and sales both happen at Ireland. Then your entire profit is shifted out of USA, so that it amounts to profit shifting and it is not liable to US tax. So this huge tax avoidance, when I say huge, what is the size of tax avoidance? As per the report by International Tax Justice Group, American multinational corporations having untaxed net profits kept outside USA amount to $2.5 trillion. $2.5 trillion is untaxed money. And this is what made America sit up and take notice and said, this is not acceptable. And that is what started the whole exercise. Now BEPS say tax will be payable where the value is created. Now where is the value created? This is the whole exercise of it. Okay, now I am coming to slide number 16, because some of the issues in the intervening slides I have already covered in my oral talk. We must understand that there are two-pronged attacks on tax avoidance. If we say tax planning is something which is legal, and we say tax evasion which is something illegal, it generates black money. Okay, so these governments are not content with avoiding just legal tax planning. There is a very serious attack on illegal tax avoidance also, which is tax evasion. Today we will not deal with black money attack. Only I would say very briefly, and this is very important, black money law has been passed in India, FEMA has been amended in India, and under prevention of money laundering, suspicious transaction reporting takes place. These things have been already introduced. Under the BEPS, there will be an automatic exchange of information. This, all of you are aware of FATCA, the American law about sharing information. This also is now being accepted by more than 80 countries, so that income tax departments of these 80 countries will share information with the relevant countries. So illegal tax avoidance is going to be extremely difficult. Now I am taking, sir, as you had said, I am interested in economics. So I am taking 2 minutes on economics. In my submission, the 2008 American crisis which started is not yet over. USA and Europe and Japan and even China, all these countries are suffering from absence of GDP growth. They are suffering huge economic losses, and they are transferring their economic losses out of their country to others by terms of currency war, economic war, trade wars, and several other things which we as chartered accountants generally don't discuss. There are silent economic wars where, as in the next slide, Russia, China, India are the victims of silent economic war. There are open wars where Iran, Iraq and other countries are suffering from economic war. My submission is, if you have every year as your best judgment assessment under section 144, your tax practice, your tax compliance are going to be difficult. And probably there is an atmosphere of fear in India, I don't know about the rest of the world. In India, for the businessmen and some very, very senior management people I have met, there is an atmosphere of fear. If internationally there is a silent economic war against India, I mean, it's a different story. I can take 2 hours on that. I won't take it today. In that atmosphere, a charged atmosphere, what is required is that there should be a solid trust and confidence atmosphere between government of India and businessmen of India. This is necessary at this particular stage. Exactly at that stage, we have a fear psychosis. Why is a fear psychosis? Because there is corruption at all levels. And in this situation, when you have got discretionary powers in the hands of the authorities, the businessman is afraid. So we are entering a difficult economic phase. From just tax phase, I am talking about global or macroeconomic phase. With that, friends, I have completed part 1 and I am open to queries.
Thank you. Thank you, Rashmin bhai. Uh, I think,
Please,
should
you
I
start.
deal with the questions or should we get the audience first? I think, well, Rashmin bhai, taking the cue from your last slide,
Mhm.
you know, certain MNCs have been indulging in this BEPS, as you call it.
Yeah.
The question is how many of them? Is it a handful of companies, have Apple, Facebook, and these are all the digital economy companies, the $2.5 trillion dollars. I'm sure a large percentage of that money would be maybe, restricted to less than 10 companies or maybe in that range. Now, because of the misdoings or whatever we may call it, I'm not sure whether it's a misdoing because if the governments promote laws which encourage tax planning, because these are all legitimate tax planning that is admitted.
Legal,
They're legal
not
tax planning,
legitimate.
legal tax planning within the four corners of law
Yeah,
as we
yeah.
understand it. Now that is what the concept is, to bring morality in taxation. That is what is BEPS. But for a handful of such companies, the amount of burden which has been cast on taxpayers across the world is going to be phenomenal. The amount of tax information that is going to be gathered around the world, that is going to be exchanged because of these reports. Do you think that is justified? Would it not have been simpler to deal with those companies rather than subjecting everybody now to all of these requirements? What is your
I'll tell you, sir. I entirely agree that BEPS is going to cause huge burden, and not only even global GDP can be affected, because if you have to live in suspense and fear, you don't want to invest new things, you don't want to expand, so everything will be affected. First, one issue. Second issue, how many companies are doing it? Okay, let us say there are 1 million companies, and this tax avoidance, as you say, legal avoidance, is done by 100,000 companies. For 1,000 companies, will you affect 1 million companies? Now, part answer to this is that they have got thresholds. Okay, that only companies going above certain thresholds will be liable. Point one. Second, only associated enterprises will be liable. Supposing you have a company, standalone company, then it will not be affected by BEPS. Also, it is only meant for cross-border business and investment. Let us say we have 100 companies which have nothing to do with outside India. Their whole income, their whole investment is within India. So their tax is only domestic tax. Okay, they will not be affected. Okay, even then, all the leaders, all the large corporations, whether Indian or foreign, they have cross-border investments. So they will all be affected. It is a huge injustice to honest taxpayers. I entirely agree. My only point of submission is, who is responsible? Responsible is not government. Responsible is those 100 companies or those 1,000 companies who have crossed all the limits of logic and legitimacy to do something which is called legal. They have, see, 2.5, एक second, just let me complete this. We understand this. $2.5 trillion is avoided just by American MNCs. We don't know other MNCs. Their totals may be still further. Now, this is done. It may be one company, maybe 100 company, maybe 1,000 companies. They have done something massively in my submission wrong. Somebody may have another submission, maybe legal, but this is what is being targeted. So the culprit is people who have avoided tax. This is my submission. Now you can tell.
Well, my role would be to just throw up the issues
Yes,
because there will be no time otherwise to
true,
conclude on every issue.
true, true.
But actually the governments which were involved, and I'm sure US was aware that their monies, because this we are talking of legitimate planning or legal
Legal
planning as
planning.
you call it,
Yeah,
not legitimate. And even EU, when they have within the EU, Ireland, they have got
yes,
Luxembourg, they've got all these
yes.
jurisdictions. I'm sure were these were totally aware of what was being done, and they had their own reasons to promote it. Anyway, that
Yeah,
we'll come to separately. The second question, Rashwin bhai, is this concept of BEPS is bringing in morality in taxation.
true.
Now, as we learned as students also, that within the four corners of law, legal tax planning is acceptable. Nobody pays tax with a smile. Let's accept it. I would like to save as much tax as I can, provided I'm doing it within the corners of law. I'm not talking about evasion here. Now, bringing in a concept of morality, bringing in a concept of substance over form, is it not going to cause a lot of chaos and disharmony? Every country, every jurisprudence in a country is going to interpret substance in a different way. Here we are talking of cross-border transactions. Now, substance is again is not going to be a very well-defined term. There is bound to be differences as to where the substance lies. So it's going to, your like India may take a stand that this is the substance of a cross-border transaction. The other country might say, sorry, this is not the way we look at it. Is it not going to give rise to so much of dispute and so much of disharmony, people not getting credits? So are we really, ready for something like this? Are countries like India specifically, or even developed countries, are we ready for something like this?
Very good question. I'm very happy you raised it. My first submission, I have series of submissions on your query. It is absolutely right to bring in morality into taxation. I think Gandhiji has said morality should be there in every walk of life. And I fully agree with Gandhiji's statement. An immediate response will be, in fact, in many lectures, prominent chartered accountants have said, you can't bring morality into taxation. Then an income tax officer says, you don't bring morality into my cabin, give me bribes. That time these people shout, no, 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 how can you ask for bribes? This is illegal. But the tax planning which you will see, there is very thin veil of legality. There is no substance. If there is, you do something which has no substance, it is illegitimate, immoral, unethical, everything. So far, people have got away with this kind of planning. BEP says, we will not tolerate this.
No, Rashmin bhai, what I'm saying is, as a taxpayer, to deal with this substance over form, is it not necessary that the government at their levels, each one, enacts laws which are clear and specific, so that there will be, trying to say that there will be substance over form, and now leave it at the, look at, try to imagine an Indian income tax officer at the lowest level applying the concept of substance over form when a foreign entity's assessment is being done.
Can I
Now,
ask you
now,
a question,
what
Sushil bhai?
what are we? I'm not criticizing the income tax department or anything. In fact, I would rather give full credit to our tax department because our judgments are being debated world over. We have been, setting the precedents in many countries. But there are inherent, there are inherent issues, and I'm sure there are other countries where there would be worse problems. And what sort of let there be clarity in laws. Countries can have laws very clearly defined. Here countries are competing for investments. Countries are competing to save,
Sushil bhai, we
Ireland.
have to move.
Yeah,
Sorry.
Ireland
Yeah.
has been asked to collect tax which it doesn't want, and there is a dispute. It's a very funny situation when the European Union says Ireland should charge money to Apple, and Irish government doesn't want it. So what are we? Yes, state aid. Exactly. Correct. effectively, Daksha, is that they are supposed to get the money which they don't want. So, no, it's not tax. It's state aid, which, yes, should be taken back. So, and the Irish government says, no, we do not want it. The US government feels that Irish government would not have been entitled even to that 0.5% tax which they collected. Because anyway, all the transactions are outside Ireland, so what is wrong? But that's a separate issue.
Part
Yeah.
two.
So the question is to you, Rashmin bhai, is it not governments who are at fault? Why are the taxpayers being subjected to all this?
In my submission, governments are at fault. Why does European Union permit Ireland, Switzerland, Liechtenstein, Luxembourg, all kinds of tax havens are there? You have first tax havens within you. You go ahead and sign treaties with them, and then people want to use those treaties, then you blame the taxpayer. This is
And
certainly
you
wrong.
are the people who then start a project like BEPS.
Yes.
So,
Yeah,
so
yeah, yeah.
and then you are the people when it comes to US, which says that digital economy action plan 1 doesn't suit us, so we are not ready to conclude it. So what are we, and why is India being a torchbearer of all this? Anyway, so
Uh,
with this, I think on action plan 1, if there is any other query from the house, otherwise we'll go to action 2.
Actually, what I would request, uh, action plan 1 has almost taken 1 hour, and we have 3 more plans. So let me submit my view. I'm not saying you accept my view. Uh, Everybody is responsible. Okay. Governments could have avoided signing treaties with double tax avoidance agreement. I mean, with tax havens. Multinational corporations and even individuals. It is not that MNCs only do tax planning. Other people also avoid tax. Uh, Only in very briefly, I would like to answer you. My submission is, if there were morality in taxation, BEPS would not be required. If taxpayers were paying up taxes honestly, the law will be very simple. We would not have a law of 300 sections. It would be a law of probably 50 sections only. Lot of provisions in the Income Tax Act have come. Every section has come, every amendment has come because some tax consultant and some taxpayer abused the law. But Sushil bhai will not argue now. After 8 o'clock, if
I have
time is
only
available.
one small question which comes up. There is a simple section like 80C in the Act
Yeah.
which gives you contribution to Provident Fund, because Provident Fund would be helping to develop the country in whatever way. And so the government gives you a benefit. Would you not be availing of it? And do you think that is illegal, illegitimate, whatever it is? So
Nothing.
if as an individual you feel 80C is a good tax planning, as a country, if a country wants investments and it gives some tax incentives, now the problem is, they are looking at those incentives similar to ATC, and the companies which use that feel the same way as we use ATC. Anyway, that's the point. Let's go further to point number
Yeah.
2.
Let's go to part 2, slide 1. What I am discussing here, presenting before you, because the conceptual discussion we can have for the whole night. Let's come to the part 2. What has caused BEPS? And my submission is, in this whole exercise, it is the tax haven governments which are partners with taxpayers. Our tax compliance as it exists today is also very tough. So after BEPS, what will be the situation, and is there any solution to this? For this, as I said, Apple Computers is the illustration I have taken. Apple Computer has a turnover of more than $200 billion. It has huge profitability. We are happy about it, that is no problem. But Apple decided that I don't want to pay any tax in USA. Okay. Now understand, this American multinational corporations policies within USA do not even try to avoid US tax, because then you will come to dire consequences. But if you are earning something outside USA, let us say you have to pay tax to Germany, Britain, France, India, zero tax, don't pay any tax. How not to pay tax in the country of market, and for the foreign income, how not to pay tax in the country of residence, that is USA. So Apple Computers set up a whole corporate structure in Ireland. First step is not to pay tax in USA. Second step is not to pay tax in countries of market. Third step is not to pay tax in Ireland. So you have a totally zero tax situation for turnover outside USA. Here, please understand, the information is not available. Okay, I have read the European Commission's order, American Treasury's white paper on this matter, and some search on the internet. So the information about the figures which I will give may be correct, may be slightly here or there. But the amounts are not important, the concept is important, and that concept is what I am going to say. I have no personal information about how Apple Computers does its business. Okay, so there may be something which may be incorrect here. What I am trying to show is just as an illustration how multinational corporations are doing their tax planning. This is the organization chart of Apple Computers. You have a American holding corporation and it has got business within USA. We are not going to discuss their taxation within USA. Then Apple has got business outside USA. For that business, it has got a company corporate structure in Apple Ireland, and I am referring to all the companies as if it is just one company, Apple Ireland. This Apple Ireland, as we have seen in one earlier chart, there are suppliers of goods and services to Apple Ireland which may be from China, maybe from India, maybe from any other country. Now all these countries who are the supplier countries may get some benefit because of BEPS in transfer pricing rules. Then there is Ireland, which in any case doesn't want to levy tax. Then there are countries of market, which as I said includes Britain, France, Germany, India and 100 other countries. All these countries, the 100 countries of market, shall get zero benefit out of BEPS. This is a point which I am running through and through my presentation. Apple has a turnover, last reported turnover of $234 billion. Its profits in Apple Ireland, the turnover figures are not available with me, profits are more than $20 billion. And this is what it wants as tax free. I am going to slide number 6. Yeah. How do you avoid American tax? So please understand. Now I am assuming for a moment that you are not aware of international tax environment. Many of you are already experts on it, so pardon me, but I am saying for the benefit of those who are not aware, there are tax haven governments. It is the government's business to help you avoid the tax of regular countries, and they help you for a fee. Fee may be $500 for a company in British Virgin Island, fee may be $10,000 for a prosperous country, but they charge you a fee and they help you avoid the taxes. And these governments have a full armory to deflect the attacks by these journalists, investigative journalists, governments, and to confuse the courts of countries like regular countries. So Apple Ireland is avoiding American taxes. Why can't America tax Apple Ireland? Because when you have a law that an American resident is liable to American income tax on its global income, so why not tax Apple Ireland? Now I am going to the fundamentals of tax planning, slide number 7. We have this principle that every company is a separate legal entity. You know, please understand, I am trying to lay out list of maxims being used, list of legal principles being used in tax planning. Okay, so something which may look to you very elementary. Company is a separate legal entity. We have all studied in Solomon versus Solomon company law. It's a separate legal entity. Next point is, a company is resident where it is incorporated, and then if a non-resident of USA is not liable to tax in USA. So by now you have used 3 or 4 legal principles. This is just explaining. You will see in every slide, no, in many slides, 2 numbers. On the right hand top corner I am giving slide number. On the left hand side I am giving the legal maxims here. This is mainly important in part 2. And BEPS action reports, wherever they are relevant, I would give it in a underline. Now, American government is the most aggressive government in preventing tax planning by Americans. So transfer pricing, which we borrowed from USA in the year 2000, was prevalent in USA for 40 years. Controlled foreign company rules we have still not brought into India, but it is prevalent in USA for 30 years. Now, will not Apple Ireland be covered by controlled foreign corporation rules? You may be surprised, sir. It won't be covered. Existing rules of CFC are not competent to deal with the planning done by Apple Corporation. Since under CFC rules, it is only the passive income of a foreign corporation which is taxable in USA, and Apple has so arranged that it has a full-fledged trading income. It's a business income. So under the existing rules of CFC, it will not be covered. Now companies like Apple, Google, Facebook, again these are just illustrations to tell you, you all know that these are the companies which are dealing in e-commerce. So a company which has got global business and has got e-commerce business is capable of avoiding COR taxes and COS taxes. And the simple mechanism used is just move your head office to or your subsidiary structure to a tax haven. Tax haven is not willing to tax you because in any case it would not get any tax. And COR, COS, all the 3 taxes you avoid. So as I have said earlier, under BEPS, CFC provision itself will be amended, BEPS Action Report 3. Okay. Now notice a trend. BEPS Section 3 says amend CFC provisions. In the year 2015 itself, somewhere in March, April, when the American budget was presented, they have presented a full chapter of amending CFC provisions with retrospective effect. Okay, BEPS Action 3 report says forget about passive income and active income. As long as you have got a controlled foreign company outside India, the whole of its income should be taxed in COR. This is BEPS report. American government proposes similar law. Now when you look at India, BEPS reports were presented in October 2015. Thereafter CBDT appointed e-commerce committee. The committee deliberated what should be our law. Those were baby steps. And in 2016 budget we came out with a law which admittedly is only part law. Further things have to be developed. So after the world decided that these provisions have to be amended, we are coming out with some provisions. America was ready with a legislation even before BEPS reports came out. So whatever you want to see behind this. There is a second part that when Apple Computers develops its hardware as well as software, huge amount of intellectual property goes into it. Now let us say whatever may be turnover of Apple Ireland, it may be $50 billion, maybe $75 billion. Certainly they have used intellectual property, intangibles, which actually belong to Apple USA. Right. Now when Apple Ireland purchases goods at say $100 and sells for $110, can you say that the entire $10 belongs to Ireland? Shouldn't some profit be attributed or some charges be attributed to USA? Surprise of surprise is American government's transfer pricing provisions are inadequate to deal with the planning which was done by Apple Computers. So you have BEPS action reports 8, 9 and 10 which say that this inadequacy shall be removed, transfer pricing provisions will be strengthened, and a lot of profit, how much we don't know, depends upon the facts of each case, the profits will be attributed to American government, or it will be American tax base will be larger. So Apple Computer's tax planning will be attacked in two manners. One, under transfer pricing provisions, more profits will be attributed to COR. Second, after this attribution, whatever is left is fully taxable in USA. That is under CFC provisions or Action 3. Anyway, so what I have explained here is Apple Computers designed how to avoid COR tax. BEPS action and American government are taking steps how to plug that tax planning. To understand second level of tax planning done by Apple Computers, we will go to how Apple is avoiding Irish tax. Okay, now this is very interesting. We have slide number 13. Ireland has got a 12.5% corporate tax. Now, when Apple sells, let us say, $50 billion of its goods and services outside the USA, whatever may be the figure, its profits in Ireland are more than $20 billion. Why should it pay 12.5% tax to Ireland? It should not, because in any case, when the goods are purchased from China and India and they are sold to Germany and France, where is Ireland coming in the picture? Ireland has no right to tax it. Apple knows it, Irish government knows it. Irish government is only providing a place of incorporation. That's all. So Irish government, that 12.5% is a rake rate. Dakshaben, when you go to buy a sari and the store says the sari is priced at 1 lakh rupees, you are not afraid. 1 lakh rupiya bolta hai. Start bargaining. He may come down to 40,000. Okay, in which case 1 lakh rupees is rake rate. 40,000 is the real rate. Similarly, for Ireland, 12.5% 12.5% is a rate just for the sake of quoting. Apple Computers sat down and negotiated. So Irish government issued two rulings. The effect of the ruling is this: Apple Ireland paid 0.005% tax, third digit after decimal. Where do you go to third digit after decimal? It's only in case of gold purity. Nowhere else you go up to this level. Okay. 0.995 or 0.999, these are the figures known to us, but otherwise in tax rate, I mean, we talk of 35% or 25%, we don't talk of up to third decimal. Even fed rate is also 0.25. 0.25, yes. So it doesn't go beyond decimal, correct? Now here you have that kind of tax rate. This is the business of a tax haven. Now, you can raise a very simple question that if Ireland does not want to tax only, then why keep 12.5% rate? You may be aware, when in India this Mauritius tax planning started in 1993-94, Mauritius government had a rate of 30% corporate tax or 0%, whatever you like. Okay. Yes. How can you like? You don't like anything, but you want to claim that your SPV set up in Mauritius is tax resident of Mauritius. And the view taken in 93 to 95, etc., was that you will be a tax resident of Mauritius if you pay tax to Mauritius. So you select 0.005%, pay that to Mauritius, and tax consultants were arguing, as long as you have paid even 1 rupee tax to Mauritius government, you are resident of Mauritius, hence you are entitled to double tax avoidance agreement benefit of India-Mauritius treaty. This is the whole idea. This is the idea of, you have a law which says 12.5%. So Indian courts will say, after all, Mauritius is like India. India imposes 35% tax, they may want to impose 30%. So what? There is no problem. But then the fact that actually they don't pay any tax. So this is a massive difference between facts and your facade. And this helps in treaty shopping. I'll go to slide 16. This is a very important point, point number 15. As I have already said, Apple Computers, the American corporation, is buying goods from X country, selling goods to Y country. Ireland has no place of business. Ireland has no jurisdiction to tax that income. Okay. So what is the big noise Irish government or European Commission can make about this taxability? I think, okay, now I am coming to slide number 21. Apple does not want to pay tax to Ireland. Ireland does not want to collect tax from Ireland, but Apple Ireland is incorporated in Ireland. So how did they actually avoid Irish tax? That is the issue. Now you remember our section 6(3) of Income Tax Act. If the normally an company incorporated in India is always resident of India. Even a foreign company would be treated as Indian resident if its place of effective management is situated in India. Now Ireland makes a law or accepts an interpretation which is exactly converse. Here is Apple Ireland incorporated in Ireland, but it says my place of effective management lies outside Ireland. So I am a non-resident of Ireland. I have read Irish Income Tax Act. In my submission, this trend could be incorrect. Now, I am not expert on Irish taxation law, so I am just raising an issue that it is possible that this trend could be incorrect. Point is, who will challenge this trend? Ireland in any case doesn't want the tax, so it has gladly given a ruling that Apple Computers is interpreted, it is non-resident of Ireland, hence its foreign income is not taxable in Ireland. Yes, we agree. They gave the ruling and matter is over. It is not the business of a tax haven to start asking questions. They don't ask questions. The next issue could be, one may legitimately ask that if Apple Ireland is not resident of Ireland, then it is resident of which country? Very legitimate question, but who will ask? Not Ireland, Irish government. And your and my asking question is academic. So now Apple Ireland has a branch in Ireland because they have 1,000 people employed in Ireland and they do some activities in Ireland. So they have a branch in Ireland. Now, does a branch make you resident of Ireland? I mean, everybody knows who practice international tax that branch does not give you residential status. Okay, but Apple claimed that they have got a company in Ireland. Now, point is, if you can't claim Irish residential status, then you don't get benefit of double tax avoidance agreement signed by Ireland. Okay, where is the head office? We are on slide 25. Apple Ireland is non-resident of Ireland, resident of no country. So it is a nomadic company. Where is its head office? It's truly virtual. But it exists somewhere on the earth or not? Not even on earth. Okay, somewhere. Cloud. It is cloud. All cloud servers are located on earth. Please understand, cloud is a nomenclature given, but it is in cloud. Okay. So my submission is, this is a stage where we have reached, where things You may call it is legal, but do you accept this is fair? Do you accept this is legitimate? Or would you call it just plain simple facade? This is what BEPS reports are saying. So far you have avoided tax. So far you have called it legal. We will not penalize you, but US government will amend the law with retrospective effect for 10 years. In case of Vodafone, when Indian government wanted to amend the law, the whole world made hue and cry, including Indian tax consultants. Everybody made a hue and cry. And American government wants to make 10 years retrospective amendment law. Nobody has any complaint, no protest. And 90 countries around the world through BEPS reports support American action. Okay, now sitting in Ireland, Apple is selling to 100 countries around the world. Whether a country of market can be called country of source or not, that's a separate issue I will deal with. My point is, before e-commerce, meaning before it was practical to sell goods and services through internet, let us say before 1975, okay, computers were not prevalent, internet was not there. If you wanted to sell goods in any country, you wanted to sell services in any country, you had to go and sit down in that country. You would either open a branch, you would open a permanent establishment in that country and then do the business. Today, e-commerce has made it possible for Apple, Amazon, Google and 100 other companies, including Indian companies, to sell their goods and services across the boundary without setting up a permanent establishment in that country. This is a scientific development, a technological development, which all these companies have used. They have not set up branches in all the 100 countries. They have not set up subsidiaries, and they do their sales of goods and services in those countries. This is the crux of the issue which we discussed in the high-powered committee in the years 99-2000. This is a fact which at that point of time was ignored. In the year 2005, OECD came out with a report. After Indian committee gave the report, OECD came out with a report. I mean, to put it like this, high-powered committee of India said existing rules of international taxation are inadequate to deal with this kind of situation. Full 5 years later, OECD came out with a report saying very clearly existing rules of international taxation are fine, there is no need to disturb it. Come American financial crisis, OECD has written 15 times in 15 reports that existing rules of international taxation are inadequate to deal with the e-commerce business and to deal with the present tax planning. And that is how everything is now changing. I'll come to slide number 33. We have seen how Apple did the planning. Apple did a planning which so far it has succeeded in avoiding COR taxes, COS taxes and Irish government taxes. It has involved several principles. Some of the principles I have discussed with you at length. Some principles I have not discussed. And I would like to just tell one thing, sir. Normally when I make a presentation, I give a full paper. Generally my papers are lengthy, 30 pages, 50 pages. But when you read a paper, everything is explained there. This is a PPT presentation, but it is largely kind of a paper. So even if I have missed 5 slides or some slides, interested people can read it and the meaning would be conveyed. Here another point I'm making is this, that when you use 25 maxims to avoid your taxation, what happens? Let us say that in absence of BEPS, in absence of amendment to the law, if American government wanted to say, I want to tax Apple Ireland, then the first issue is prove that Ireland is a tax haven. Your saying it is tax haven doesn't mean anything. It has got a regular income tax act. How do you prove that it is a tax haven? Then you lift the corporate veil. Okay. Now just talk of these two principles. And imagine Indian Income Tax Department had filed a case against any Indian SSE. It will take minimum 10 years in the court of law to prove these 2 points. Okay. And if the department has to prove 25 points, to succeed on 25 points is next to impossible. This is the situation which has caused BEPS. I am coming to my slide number 1. What is BEPS? What has caused BEPS? BEPS is tax avoidance. Massive tax avoidance using 25 different legal veils and claiming that I have not paid tax and it is perfectly legal. This position has caused BEPS, and BEPS says we are changing the law so that you will never be able to claim that your tax avoidance is legal. This is sum and substance of parts 1 and parts 2. Sorry, part 1 and part 2. I will skip some more slides so that I can get some more fire from Sushil bhai. 1 second, I'll quickly go to Sushil bhai. Now, what is more important is, let me go to slide number 38. European Commission. You know, in European Union, there are more than 20 countries who have joined the Union. So they have a treaty. The treaty says no single member of European Union shall provide harmful tax competition to the Union or to any other member in the Union. So European Commission started investigation against Apple computers. It asked for reports, information from whom? Not Apple computers, but Irish government. Now I am so happy looking at the picture, Irish government being responsible to answer to another government, which is a union government. Okay. And Irish government officers giving submissions. Anyway, based on all these submissions, European Commission issued an order that you have given harmful tax competition. You meaning Irish government has, Apple computer doesn't come in the picture. Apple is not guilty. Guilty is Irish government. So now you recover 13 billion euros from Apple computers. Add to that the interest which could be chargeable on that. This is European Commission's order. The European Commission order, it is available on European Commission's website. One should read it to understand what is the international environment. This is the slide which is given in the Commission's order, how Apple Ireland is avoiding Irish tax. As Sushil bhai said, the irony of the situation is that Irish government doesn't want the tax. Apple doesn't want to pay the tax. And the Commission says, Apple, please pay to Ireland. Now both will challenge the order. Naturally, they will go to the appeals court and they will challenge the order. Some people are alleging, some tax consultants are alleging that European Union is crossing its limits and it is infringing on the sovereignty of individual nations. We will not discuss European Commission's order because that of course will be beyond our scope. What is American government doing? Even before European Commission came out with the order, American Treasury published a white paper. In the white paper, they have advised European Union not to pass such orders. Can you imagine? Treasury has studied everything that European Commission is studying and is issuing an advisory. Please don't pass such orders. I remember again when Vodafone case, it went on in the court, High Court to Supreme Court, back to High Court, Supreme Court, things like that. And the whole world was advising government of India, we should not tax Vodafone. I was wondering how can a British or an American or a French tell, because the matter was sub judice. When a matter is sub judice, this is the Indian law, we don't know about American law. When matter is sub judice, you can't say this should be done or this should not be done. It amounts to contempt of court. And 20 officers of 20 countries did contempt of court in India and no action was taken. That is the audacity of certain governments. With that audacity, they have published this white paper and they have said, don't pass such orders. It is contrary to the existing law. It will spoil our relations. So the Treasury paper is also worth reading. Uh, the major stand taken by American government is this, which I have said earlier, that if Apple sells goods to France, Germany, India, in any case, Ireland has no right to tax. So what is the noise you are making about? Friends, with that, I will complete part 2 and then
Thank
after
you.
the fire, we'll go to
Thank
part
you,
3.
Rashmin bhai.
Yes, sir.
Well, on this, in this
Ritwik, can you
part,
change to part 3?
in this part, you have mainly explained to us Apple. So
Yes,
let's stick to Apple and
please,
its structures.
please.
So the first issue which arises is what is wrong with what US is doing or saying in this context, in the example that is on hand. What US is a resident country. US has well within its powers to have the CFC law amended, because CFC is a SAR which any country can bring in. So US has amended its CFC, maybe retrospectively, and that is for their government and their courts to decide whether retrospective amendment is valid there or not. And so whatever they have done, I don't think anybody can find fault. Even if assuming their CFC is valid, they will definitely give credit for that 0.05% or 0.005% that is paid in Ireland or wherever. So that credit will be given by US. So as far as US is concerned, they have acted well within their rights. Now the next issue which arises is about Ireland. We have all admitted and accepted that Ireland would have got not even 0.005% had it not come into the picture. Now, you yourself said Apple set up a branch there, has 1,000 employees. Now, 1,000 employees is quite a substantial situation in a country of that nature, a developed country. So, Ireland had its own, reasons for encouraging this, and they also got 0.05%, which was a bonus. So Ireland also one cannot fault with. Now, whether their tax laws should be, because even our Mauritius has 80% deemed credit. Now, each country would have their own justification or reasons for their tax rates. The next issue which arises is about EU. Now, EU is trying to recover through Ireland $13 billion or whatever is that sum with interest and penalty. Now the question is, the existing rules, the treaty rules, where EU was a party, OECD is a party, the existing rules do not permit, the existing rules of source and residence taxation, concept of PE, concept of preparatory and auxiliary Article 5, all have been correctly applied by Apple, legitimately. And the existing structure does not permit any taxation in any of those countries. That structure is well within the four corners of law, and that is accepted and admitted by everybody. So where do you find, if you look at this example, where exactly is there really a merit? You may change the rules for future, but in the given circumstances, I do not personally find US in the wrong or Ireland in the wrong. You may change rules, new rules would apply to the governments in future, but as far as the past is concerned, I think it has been extremely legitimately done, and that is my humble submission. What would be your view on that?
Sushil bhai, my whole attempt in giving Apple computers was to explain what tax planning multinational corporations do, what kind of complexities they bring in. These plannings have caused BEPS, like it or not. I'm just placing facts. I'm not commenting, not criticizing anybody. This is historical development. This history has become present. BEPS is now present. Your whole stand up, whatever was done was legal, and by legal you assume legitimacy. For me, there is a difference between legal and legitimate. I think it was illegitimate, though legal.
Immoral, but
immoral,
legal.
unethical, illegitimate, everything, but legal. Now, point is, I'm not entering into debate on this. BEPS is changing this position. You will listen to hundreds of chartered accountants and advocates saying the same thing, that I have done what I have done was legal. My submission to you is, be prepared. What was legal yesterday will be illegal tomorrow. If you are practicing international tax and you are giving advice to your client, give advice after studying BEPS. My only thing is this: why should I criticize America? Only I will raise one point. If India amended Section 9 arising out of Vodafone decision, then America, Britain, France and all Indian consultants also criticized government of India. Okay. But when America does amendment with retrospective effect, then we are saying what America does is in their
Rashmin
right.
bhai, there is a fundamental difference.
Yes.
India wanted to retrospectively amend, retrospectively amend the source rule. See, India was trying to interpret the source rule in a retrospective manner. And that is where, now, as a resident country, and that too outside within its domestic law, it is bringing a CFC law to tax its own residents. So I think there is a fundamental difference. Anyway, the second question, Rashmi, on your part two, is that let us now understand as to how the BEPS reports is going to really impact Apple. Let's take Apple, because the whole idea is this is what is the genesis of BEPS.
Yes.
So have these reports,
That is more important. Let us
have
go
these
into
reports
that.
impacted Apple?
Yeah.
And to what extent? Let us try and understand and analyze with the same example.
Correct.
Because Digital Economy Action Plan is inconclusive. They have said that no, at the moment we require time till 2020 to firm up our proposals. In the meantime, they've given 3 options which countries may or may not. That too they have with a caveat that so long as they comply with the overall frame structure of BEPS or OECD treaty, then they can experiment with equalization levy or 2 other formats. So Action Plan 1 is inconclusive. Now the only place where they seem to have made some amendment is the Article 5.4, where preparatory and auxiliary, they have said that each
Sushil
of those...
No, I'll give the answer. I've got your query. I'll give the answer, please. We are restricting to Apple computers, the tax planning which we discussed, sir. Action 3, CFC report. America, meaning Apple USA, owns 100% of Apple Ireland. So Apple Ireland's 100% income will be taxable in USA, period.
That, Rashmin, as I said, as a resident country...
No criticism. Please, I'm just answering your query.
They could anyway do.
So I'm not...
As far as the source country... See, the issue which has been raised is that in the source countries, if Ireland was not the source, where was the source? None of the countries got any tax. How, after these BEPS reports, are the countries going to get taxed?
That is part 3. Let me come to that. See, for your query, your limited query, my limited answer is 100% of Apple computers' profits will be taxable in USA. Period. That is my answer to you. Now the next part is, let us still discuss.
Well, it may be interesting to note that OECD's financial budgets are to a great extent financed by USA. So I think that is fine. so there is that report.
Thank you for bringing that to light.
Now any other query on part 2? Otherwise we move to part 3.
I think part 2 it deserves, if there is any query.
Yeah. Otherwise we get to part 3.
Yes, sir.
Doesn't help the US government at all, because the tax that is going to be collected is going to be collected from the Apple computers incorporated in US. So in fact, they are going to lose substantial amount of the tax, and US is not going to get the tax benefit. It is going to be
See, I'll tell you what. Okay. I'll repeat the query for people who have not been able to hear the query. Tell me whether I understood your query correctly, that the European Commission has passed an order asking Irish government to collect 13 billion euros from Apple computers. Now, does that order affect American government? Correct. Now, the point is, Apple computers has got how many? Some $200 billion sitting in Ireland. Okay. Now, to me, it looks like a pile of gold lying there. If I were US government, there is a pile of gold on which my eyes are there. I have already brought the law to be passed with retrospective amendment that $200 billion will be taxed by me at my corporate rate. Okay, whatever is the rate. Now, वो सोने का दल्ला है, मेरी नजर उसके ऊपर है, आप नजर मत डालो. That is the point. That money is meant for America to tax. Nobody else should have its eyes on that. That is the only objection by US government. Okay. Yes, Dakshaben? Hmm. Other countries does not include USA. No, no. Hmm. No, if you look at the principle or the ratio behind the order, see the ratio is Apple has sold goods in Germany, France, etc. Now those countries are not taxing today. That is why.
In fact, that's a question which I have reserved for the end for Ashwin
Yeah,
Bhai.
let us go to
To
that.
explain to me how does India become a source country? Using your so that is a question we are going to debate. Because that's the fundamental situation. But let him complete his third part.
Friends, we have got 20 minutes left. So I would suggest we go little faster. Okay. And of course, after, meaning my plan is to complete my presentation by 8 o'clock. Then we have 15 minutes full for discussion of the queries. So I will now in next 20 minutes, I'll just present a few ideas before you.
If you can give us 20 minutes, it would be better for discussion.
President is here.
No, no, no. What he is suggesting, you use your 20 minutes.
I know. So
President doesn't come. We will not interrupt. We will
I thought you have understood me.
to
But
save on time, we will try not to interrupt you and you can finish it so that then we can have a discussion.
yeah. Friends, as I have said earlier, my slides are quite self-explanatory, and I suppose even the notes given before my slides would be there on your computer if you have downloaded the slides. On this slide number 5 of part 3, I am raising fundamental issues which e-commerce committee had raised in the year 2000 and which has resulted in equalization levy in the year 2016. Okay. I am trying to explain the genesis behind the whole thing. International taxation rules. Concept of permanent establishment was drafted and established before internet became practical, before commerce through internet became practical. This is a long theory, but since it is discussed for last 20 years in the world, I will not go into details. What is a PE? In very brief terms, permanent, you see the position of law is like this. A government cannot tax a non-resident on his business income, except when that non-resident has got a permanent establishment in I'm sorry, in your country. Why this permanent establishment? Permanent establishment is a threshold. Let us say a British lawyer comes to India. He gives advice to his Indian client and he charges 10,000 rupees. We don't want to tax 10,000 rupees. Just as within Indian Income Tax Act, there is a basic exemption limit of 2.5 lakhs. If a person earns only 2 lakh rupees, should he not pay income tax? We are not going into it. We are not interested in the administration of it, apart from social justice and all that. So 2.5 lakhs is a threshold. Similarly, Article 5, the concept of permanent establishment. Yeah. Now some procession is going outside. Yeah. So the point is, permanent establishment is a threshold fixed before e-commerce was possible. Today, with the help of e-commerce, a person can do massive business of billions of dollars and still it would not have permanent establishment under the existing definition. I will not go into details of controversies, but Article 5(1) essentially a non-resident is deemed to have a permanent establishment in India only if it has got a fixed place of business. Now this concept of fixed place of business came around when e-commerce was not possible. Okay. Now look at these two illustrations. Google USA has incorporated subsidiaries in Ireland to avoid US tax. Now Google Ireland collects all the revenues from rest of the world. Google has got 40 crore users in India. Which other company would say that they have got this kind of massive base? 40 crores is a real large figure. These are the people who are using Google facility. And Google's revenue from India is more than 5,000 crores. Facebook, there are 16 crore users in India. And Facebook's revenue from India is more than 100 crores. Now compared to 5,000 crores, 100 crores looks small figure, but 100 crores is 100 crores. Now both these companies are legally not liable to tax in India because they don't have a permanent establishment in India. Now would you think that they have got significant economic presence in India? This is a new concept developed by BEPS group. Okay. Significant economic presence irrespective of fixed place of business. SEP, yeah, whatever short form you use, it's a significant economic presence. Okay. Now, would you say that Google and Facebook have got significant economic presence? This is a concept raised by BEPS. Okay. Action 1 is on e-commerce. I would also like to highlight that when Google was earning revenue of hundreds of billions of pounds from Britain and was not paying any tax to Britain, British government raised a hue and cry. In India, it's a completely different environment where every tax consultant and every taxpayer who can avoid tax is praised. You are smart. But in Britain, what started was people started picketing. They said, boycott Google, boycott Starbucks, boycott Apple. And young people were standing outside the stores picketing that these companies are not paying their taxes legitimately. They may be paying legally, but not paying legitimately. And when one multinational corporation avoids British tax, the loss is suffered by all the Britishers. Now, well, that is the environment in Britain. Picketing was done in Paris also. In India, it's a different environment. So something which we cannot argue. I am just presenting facts before you. Point is, it was e-commerce business which facilitated avoidance of tax to the extent of billions of dollars. So British government did not like it. Those of you who are interested can go to the British government's website. Parliamentary committee was constituted. The parliamentary committee invited Google CFO to give evidence before the committee, and the kind of answers which the CFO gave, the chairman of the committee was frustrated. Okay, I mean, this whole thing is a drama. I mean, it is, those who have not seen this, go on to the YouTube, you'll be able to see it. Okay. Out of this frustration came the British law, Diverted Profits Tax Act. Diverted Profits Tax Act. Okay. And the whole attempt in Britain, they call it Google tax. The attempt was to tax Google. Okay. The point is, it was not Britain alone. France, Germany and other nations also were concerned that these MNCs come to our country, they sell goods and services in our country and they don't pay any tax to us. So, to prevent this situation, BEPS groups were formed and BEPS groups were given the first and the foremost important assignment of coming out with e-commerce tax. Come out with a mechanism to plug this Google planning, to plug this Apple planning. That was the whole emphasis. You can just see the list of 15 reports. The first report is on e-commerce. Now, what has happened is task force is a committee. We call it committee, they call it task force. Committees of tax commissioners from these G20 and OECD countries were formed. They were given 15 tasks or 15 assignments. Tasks 2 to 14 have given their reports. 15 is multilateral treaty, so that will take some time. It will come out in hopefully 6 months' time. Task 1, which is e-commerce taxation. OECD has been discussing e-commerce taxation since 1997. 20 years have passed. In the year 2015, OECD says we need further 5 years to discuss. Can you see some incongruity? Something abnormal? Don't disturb me. Let me finish. Then you will discuss. Please. I am a common man, down to earth, and I am raising common sense issues. Okay. 2013 to 2015, 2 years, and 14 committees have given 14 reports. It's a massive job. But 20 years discussion and 1 report you can't give. You say that you are inconclusive. This is what has happened about e-commerce. I am raising the issue, and of course we will have fire after this part presentation is over. My submission is all the reports which have come conclusively have helped the US government in protecting US tax base. All the reports which have come conclusively have not protected the tax base for Britain, France, Germany and India. And I'll give you even more illustrations. I'm trying to rush through so that, let me raise one more important issue. I'm going to slide 17. The issue of jurisdiction. We take the law, read a sentence and interpret. We are not attuned to going behind the genesis of the whole thing. Go to the root of the matter. I have raised one issue about the definition of permanent establishment. I am raising another issue about jurisdiction. And I am giving you another illustration. Again, I don't know the facts. I am taking the name of Tatas. As all of us know, most of the registered offices of Tata Group companies are situated in Bombay House, meaning within Mumbai. Okay. So all these companies pay their income tax to Mumbai Income Tax Department. Now, as we all know, Telco's factories are based in Pune and elsewhere. Tisco's mines are based in Jamshedpur and elsewhere, and Tisco's manufacturing companies or factories are outside Mumbai. Tata Consultancy Software Company TCS has more than 4 lakh employees. Evidently, only a few employees are in Mumbai. Rest of the employees are all outside Mumbai. TCS pays tax to Mumbai. Now, assuming that every profit center could be a position liable for income tax. You consider a factory as a permanent establishment. You consider marketing office as a permanent establishment. Mine is a permanent establishment. And in USA, as you are aware, there are 52 states. Okay, and each state has its own income tax. Assuming in India we had state-wise income tax, then would not Bihar and Orissa claim right to tax the income of Tata Group? We don't have such issues because there is one central income tax act. There is no state income tax act. There is no municipal income tax act. India has avoided a wholesale litigation saying central government collects the tax. There is no further tax to be levied by any other authority, and central government will distribute the tax revenue amongst the different states. But what point I am raising is, let's go to slide 24. For a moment, this is some assumption I have made. For a moment, assume that the mining and manufacturing operations of Tata Group companies would get 50% allocation of net profit, so that Orissa, Bihar, etc. should get 50% income tax. Sales organization by all the Tata companies around the world and around India would get, say, 40% profit allocation. Then Bombay House would get only 10% allocation as the head office. You can give 15%, you can give 25%. Percentage is not important. What I am making a point is, profit center wise profit allocation is a matter of attribution of profits. For international tax consultants and transfer pricing consultants, this is common matter. If you applied these principles, then Mumbai will get 10% of the income tax which it is getting today. Do you get my point? Mumbai Income Tax Department claims that we are making largest collection of tax in country. That is because all the registered offices are situated in India. There is no, yeah? In Mumbai, I'm sorry, in Mumbai. All these registered offices are in Mumbai, so they are paying tax in Mumbai, okay? This would go for State Bank of India. This would go for ONGC, Indian Oil, Birla Group, any multinational or any large corporation you take. Point is jurisdiction. Does the jurisdiction go by a registered office? Does it go by profit centers? Now compare this with Apple computers. And we are talking of Apple Ireland. Production gets 0% contribution, sales gets 0% contribution, Ireland gets 0.005% contribution, and non-existent head office gets 99.995% jurisdiction. Okay, I am not bringing morality here. I am presenting facts before you, and I am further placing the fact before you that this is legal. So BEPS says we are changing the law, and this will be illegal tomorrow. Now, next point. Financial institutional investors. I am coming to India specific. Okay, let us say there is an American FII. They have formed a Singapore SPV. The Singapore SPV gets funds from where? It gets funds from foreign investors, which are legitimate as far as India is concerned. It also gets Indian black money, which goes outside India by Hawala, and through the FII it gets into India. This is round tripping. This is perfectly illegal. There is no question of legitimacy here. There is no dispute about it. The fact remains that there are allegations that FIIs help round tripping of black money into India. Now what happens to the taxation of FII? This Singapore SPV fragments its functions over several persons. There are brokers, stock brokers who buy the securities and sell the securities. They are independent agents, so they don't constitute permanent establishment. Their custodians are in Mumbai or anywhere in India, so that they are all doing trading. So stocks and securities are their stock in trade. This stock in trade is registered with the custodians in India. So the full stock in trade lies in India. They buy securities in India, they sell securities in India, securities remain in India, they receive money in India. Almost the 100% of business is done in India, but they have no permanent establishment in India. They are sitting in Singapore, doing business through the internet. I would call it e-commerce. They are not liable to tax in India. They are avoiding Indian income tax. Okay, now the slide number 20, sorry, have I moved ahead? Yeah. Fragmentation of activities, yeah, 30. Since they are doing e-commerce, will Action 1 report help India in recovering the tax? Clear answer is no. Then there are 15. Even equalization levy, will it help them? No. Equalization levy is not uh, applicable to FIIs. Now, action reports 2 to 15, assuming all the reports are implemented, will India get any tax from FII? No. Okay. Now, this is just an illustration I have placed before you. BEPS Action 7. This report number 7 is on artificial avoidance of permanent establishment. Okay. First illustration is a simplified illustration where a multinational corporation sells its goods to, let us say, an Indian importer. Okay. The MNC has no PE in India. So under the existing rules of international taxation, it is not liable to tax in India. Normally, even if that MNC sets up a permanent establishment in India, it will be liable to tax to the extent of profits attributable to the PE. Now, this MNC appoints an indenting agent in India. So he facilitates selection of goods, import procedures, customs clearance. There is a warehouse service provided, that is separately. There is another company which does canvassing, and they distinguish between marketing and canvassing. I am not doing marketing, I am doing canvassing. Indian importer negotiates everything with the canvassing agent. Everything is almost concluded, and thereafter, when the order placement is concerned, the importer places order with the MNC abroad. Order is signed abroad. Okay. Now, this is called artificial fragmentation of PE or artificial avoidance of PE by fragmenting your functions among several people. So, Action 7 says, no, we shall not accept this. This kind of activity may be, this is a very simple illustration. When one reads Action 7, you can go into details. There may be a PE post BEPS. A PE shall be deemed to be existing in India. Profit shall be attributed to the PE, and that will be taxable in India. So, to that extent, Action 7 will be helpful to India. What happens in the matters of Vodafone kind of tax avoidance? When Hutchison sold shares to Vodafone and profit was shifted from India to Cayman Islands, will any of the BEPS action reports help? No, they will not help. So, India will have to rely on GAR. Okay. Action 8, 9 and 10 will help COR, will not help COS. Now, I will straight away move to a few slides in part 4. Can you go to the part 4, please? Thank you. And for the lack of time, I am straight away coming to the relevant issues. My submission, you might have noticed throughout, is that we have got a mindset. We meaning international tax consultants, international tax administrators, and judiciary. We have got a mindset. There are Supreme Court decisions, but that Supreme Court decision is in existing mindset. And I am saying we need to change mindset. We need to have some out-of-box thinking. For an illustration, I am giving traffic rules. So, I am going to slide number 8, 9. There was a time when there were no motor cars. I'm sorry. Yeah. There was a time when there were no motor cars, there were only horse carriages. Okay. Horse carriages still exist, but there was a time when they were the only medium of transport, horse carriages and bullock carts. Then some fine German scientists developed motor car. Now, how do you structure a motor car? So, for him there was an illustration of horse carriage. So cars were designed based on horse carriage, where horse was replaced by a car engine. Everything else remained the same. The mindset was horse carriage. Horse was replaced by engine, but mindset was not replaced. So three companies in Germany went insolvent because a car cannot be like horse carriage. Today, we have got driverless cars. Okay, we dropped out of the horse carriage mindset. We came out. Okay, so then the car technology has advanced a lot. Now, a horse carriage is a vehicle. A car is a vehicle, and when you have the rules of road transport, we in India have that you drive on the left hand side. That will apply to horse carriage also, bullock cart also, and the car also. When you move from car to aeroplane, will the same rules apply? You can't. And if the pilot were asking, the plane is going and another plane comes on the way, and he says, "Where is the horn? And why is he not flying on the left hand side, and why am I flying?" No, those rules don't apply. And if anybody wanted to apply those rules, this is what will happen. My submission is there was an old mindset like manufacturing companies. Okay. For the old and the traditional business, concept of permanent establishment is valid. For e-commerce, it is not valid. If you want to apply outdated principles to e-commerce, exactly this will happen. What is necessary is concept of significant economic presence, or SEP, has to be introduced as Article 5, Sub-Article 8, and countries of market like India, where Google and Facebook and Apple have significant economic presence, they must be given a right to levy income tax. Sir, with that I am concluding my presentation.
Thank you, Rashmin bhai. Now, I think a few questions.
Yes, sir. Or would you like to give the audience a chance first now for a change?
I would like to have the chance.
Please.
I hardly spoke.
Please, President, come here, sir.
Sir, the first question: India, China, UK, all the EU countries were part of the G20. All the significant countries were part of the G20, which has initiated this BEPS project, which ultimately issued the action plan reports. And as of today, all of them, there is no dissent which is seen on record. All of them have agreed that the present
I have answered to your query.
treaty rules will continue to apply even to digital economy, even to e-commerce transactions. And they said that whatever changes are being proposed in the PE and other reports
Sir, I have
are
understood your query and I have answered also.
are sufficient to take care.
Yeah.
So the question, no, I get your point. The question is that if that is the case, at least the G20 countries today do not feel that the aircraft, accident is about to happen, that the technology needs to change, that the rules need to change. At least today, in their wisdom, they feel that we are quite safe, even after such a deep consideration of all the factors. What is your view on that?
You are entirely wrong. And I will tell you how. Okay. The very fact that Task Force 1 in its action report number 1 has failed in making a clear recommendation shows that there was difference of opinion. After all my talk, if you have not grasped this, I'm sorry.
Even in Action Plan 1 report, they have given
now,
these
now give
three,
me 2 minutes.
They have given these three, variations of equalization levy, etc., with the caveat that subject to their compliance with the treaty obligations. So even within Action Plan 1, though they say we are not conclusive, they have talked about significant digital presence, they have talked about all of these concepts, but at the same time, they have made a caveat that subject to existing treaty obligations. So they presently feel, and they have also made a statement that the amendments being proposed in the other action plans should be sufficient to deal with digital economy. These are the two
Now
statements.
give me 3 minutes. Okay. First point. I agree that Action 1 report says that Action report number 3, 8, 9, 10, 7, etc. will take care of tax avoidance which happens through e-commerce. So why change the rules of taxation? Sir, I made a presentation to say that Action 3, 8, 9 and 10 will not help India, will not help COM. That is my point 1. Second point, Action 7 will partially help, but not wholly. All these reports 2 to 15 will help COR, will not help COS. I made a whole presentation, and for those who are interested, I would request go through my entire presentation. I have emphasized that the old mindset where country of market was not considered country of source is outdated. And for your information, I am not the first man telling this. Friends, you may go through Professor Roy Rohatgi's book, Basics of International Taxation. In the annexures, he has given the reports of the League of Nations and United Nations. When international tax agreements started being discussed, I am talking of some 70 to 100 years old matters, they said country of market is country of source. But 100 years back, even 1950, the situation was there is a group called G4, USA, UK, Germany and France. The most advanced, the richest 4 nations of the world were considered COR. They were the exporters of capital, they were the exporters of technology, they were the exporter of goods. So the international tax agreements were so designed under their influence that COR gets maximum tax benefit and COS gets next to negligible tax jurisdiction. This happened under OECD, not under United Nations or League of Nations. During Second World War, Professor Roy Rohatgi has gone to library and produced all these reports of so many decades old, and he has produced those reports saying that, India was a colony. India had no voice that time. Brazil, Argentina and other countries, they had made a point that this definition of COS must be such that COM is treated as COS. Okay. But their voice was not heard by anybody. Then came Second World War, when the G4 were fighting amongst themselves. So they were not participating in these treaty negotiations, and the Argentina, Brazil, etc. countries came out with a report saying that COM is COS. Second World War ended. Immediately the G4 again became influential, and this Brazilian, etc., the South American report was scrapped, and they re-established position that all the rights of tax go to COR. From 1947 or 48 or whatever must be the date of report, till 2016 this situation is continuing. The mindset is decided by G4. We have followed it for last 70 years. I am now saying that change the mindset. And if you don't change the mindset, well, Indian government has accepted to change the mindset, and that is why equalization levy is before us.
Right, Rashmin bhai, I have a lot of questions, but I'm going to avoid them.
Yes, sir.
I'll ask you only one question.
Please.
As an Indian,
Yes.
and I'm speaking from Indian perspective. Now, India, is a country which is developing. India needs investments, foreign investments. India needs to create employment. India needs to create infrastructure. That seems to be, to me, to be the first priority. Taxes can follow. There could be two views on that, but this is my view. Now, don't you see BEPS actually as an opportunity for India when every foreign company wants to restructure its operations, wants to see where to have jurisdictions where they can create substance, And India has a lot of substance in terms of qualified professionals, qualified engineers, English speaking population, where a lot of substance could be actually there, factually there. Should not Indian government be talking about setting up a regime like the patent box regime or some such regimes, so that foreign companies could consider India as a jurisdiction to restructure, instead of talking language of deterring investors? Is India really ready for talking this language? Are we talking the language of a very developed country, or what could be your view? With that, I think we'll, after you answer that, let the audience throw a few questions.
Sure. Uh, this question has several aspects, and with the lack of time, I will restrict to only a few aspects. I agree we need foreign investment. At the same time, if anybody makes profits in India, he must pay tax to India. I am abundantly clear about it. We don't want income tax, we don't want foreign investment where the foreigners or Indians or whosoever will pay zero tax. Because friends, all of us have seen, you have seen Sir 80 HHC, when there was zero tax, what was happening? Wholesale manipulation of accounts, right? When tax concessions to this huge extent are given, I mean, it is allegation that FIIs with zero tax are doing a whole lot of manipulations, round tripping. And 1992 Harshad Mehta scandal, 1999 or 2000 Ketan Parekh scandal, all this happened. Why? They were facilitated by a zero tax regime. So zero tax regime, I am very clear, should never be there. You make profits in India, you pay tax in India. You may get some concession. Instead of 35%, you may pay 15%. That I am fine with, because ultimately India is only COS. I am not asking for 35% tax. But subject to the treaty, you should pay tax. So I am not in favor of zero tax regime. Now, actually, friends, before we discussed, I had a good discussion with Sushil Bhai, and I must thank him for really raising very intelligent queries. I am very happy about the queries, because that is the only way to discuss the subject in depth. We are very good friends, I must clarify. We argue and we fight on legal issues, but we are very good friends. I am very thankful to him. My point is, BEPS reports are going to help USA. So what is the great eagerness of India in following it up and becoming leader about it? And on that point, I am 100% with Sushil Bhai. That, Baba, dekho, if USA is pushing the whole world into something which is beneficial to USA, so why should we be so much concerned? And my third aspect of answering this is, Sushil Bhai said that we were very much there in G20. Our income tax commissioners have sat down and drafted the law. I mean, drafted the action reports. So what right do we have now to complain about it, right? So I will give an illustration. Imagine a society which is that old style society where all the rights belong to men and women have no rights. Okay, no right to inheritance, no right to divorce. Men has all the rights to divorce, inheritance, this, blah. And you may be aware, a few decades back, even in Europe, there were many countries where women did not have even voting right, right? Now imagine, for the sake of our illustration, that there is such a society there. Men rule the society. Now amongst these men, some men are not paying their taxes. And they are very powerful, very, very influential lobbies. So the leaders of the society decide that we must tame these powerful MNCs. So let us hold a discussion. In that discussion, now men are COR and women are COS. So men say that after all, these lobbies will also be influenced by women. So let us invite for discussion men and women, that there should be a fair and just society. The taxes should be paid by everybody fairly. Forget about legality. We are talking of fairness. So of course there is a meeting like this. There are 100 people sitting together, and the ladies raise, yes, the society should be just and fair. So my first issue is ladies should have equal rights. COS should have as much right as COR. So the organizers say, listen here, this is not even part of the agenda. What are you talking about? This is not part of the agenda. COS versus COR was never part of the BEPS groups. That is my answer. Thank you.
Uh, no one can beat Rashmin Bhai in logic. So, any
you.
questions from the floor?
Yes, please.
Add to what Sushil said. Really speaking, I agree that this is the inequitable distribution of taxes, and that COR gets to do it. But I'm also the thinking in a completely different manner, out of the box. We have been treating India as COS. Shouldn't we be thinking of India to become COR? Now, if we want to become COR, then should we be taking the end of protecting or taxing the world? Instead of that, should we not be doing something whereby the world comes here to become a COR, to make us a COR? So, while all of this is good, just as you said, this is not a discussion between COS and COR. Since it is not, let us turn it around and make it a discussion of such a nature that we become COR rather than COS. So let us think of policies, let us think of situations whereby we become CORs. And it is more of that which is going to be heard by the world rather than saying that we as COS need to be protected. No one's going to look at it and say, yes, yes, you need to be protected, especially because they are CORs.
Raksha is speaking like a woman empowerment fan.
Yeah. No, I think it's a very good question raised, and this question will linger on, I would say, rather than there cannot be a conclusive answer to this. Yeah, absolutely. And I'm quite sure Sushil has got many more questions, and the fire could have still go on till another half an hour, maybe more. But surely there is a fire now ignited in each one of us present here in answering or raising an issue, whether what are the taxing rights, what is the planning that is happening around the world, and whether India can have its own share of tax. And going further down, I think profit split method is going to be the method which is going to be used widely for the various attribution of the PE profits, maybe a deemed PE or artificial PE getting created. Uh, I may request Narayan to please present a memento to both Rashmin Bhai and Sushil for a great and lively discussion.
I know everyone's hungry, but we should feel fuller right now since we've heard Sir Rashmin Bhai and Sushil Sir. So, for those who wish to know that we had 160 participants today, 80 connected via the webcast and 80 sitting here right now with us. Um, we really wish that we just take out 10 minutes to be connected physically and technologically, those who are right on the webcast, to just listen to me for just like 10 minutes. I'll make it shorter. I'll make it shorter. I'll reduce the taxes. Yes, 1 minute. Uh, we have a few announcements for the upcoming seminars the society is being holding. There is a 2-day seminar on the latest topics of GST and income tax with the Ahmedabad Chartered Accountant Association to be held at the Hotel Kohinoor Continental Andheri on the 21st and the 22nd of October, which is just coming right after 2 days. There is also a full day seminar and a workshop on writing and drafting skills, which is to be held at the ICA Bhavan in Aurangabad. It is one of its seminars where Aurangabad chartered accountants have requested the BCS to hold such a kind of a workshop for their own benefit, which will be held on the 12th of November. Two important events coming up. One is the 17th International Study Course on DTAA. It is one of the finest courses that BCS has because of its classroom style learning based on UN and OECD double taxation model and conventions. It starts on the 3rd of December, ends on the 28th of January. It will be held right here in Gulmahor Hall, BCS. All the details are available on the website and you must enroll for it ASAP. And the most enticing event of the year, well, with a jaw-dropping venue, and that is ITC Rajputana at Jaipur. The General RRC of BCS, one of its eventful event, which will be held from the 19th January till the 22nd of January 2017. It is one of the kind of its original events which is conceptualized and executed every year by BCS. Right now, the event is also available for just the limited seats available, but at the same time, I also want to market the airlines. They're really cheap rates, flight available. You must get a seat on the flight to Jaipur from Bombay on the 19th. You will also get a cheaper flight back to Bombay and everywhere else in the country who wants to participate. Well, and this will be the 50th RRC of BCS. All the details of all these forthcoming events along with the enrollment forms are available in the newsletters, as well as the details will be published in the journals and already available on the website. Okay, so my favorite part right now is that to appreciate what Mr. Rashmin Sanghvi and Mr. Sushil Lakhani did, they have explained the gigantic topic of BEPS in such a great way in the form of question and answer and with such an explanation and varied examples that it was so beautifully and lucidly explained that I am going to be in a difficult spot right now to show my gratitude on behalf of all of us today. Most times we really are not sure how to interpret the domestic taxation laws, and it gives at least me nightmares to kind of interpret what's already available in the Indian tax law. When we have to drive ourselves to UN, OECD, BEPS and international taxation, it takes really like years to reach some pinnacle. Mr. Rashmin Sanghvi and Sir Mr. Lakhani have really elaborately and simplistically explain us why, what and how BEPS is going to affect our lives in the coming future and probably got us on less of anxiety issues. Well, I request everyone to show our gratitude to them by a big hand and hope to see you for the forthcoming events. Thank you and good night. Thank you.